Hey guys, welcome back. Non-QM series, episode 4. My name is Justin Rushlow. I will be your guide today. We have our loan officer with us, Matt McDonald. So today we're going to talk about commercial stuff, right? And we're actually going to devote several episodes to commercial because that is a very, very large blanket word that could cover a lot of different things. And technically, all non-QM stuff is commercial, right?
Sure.
Technically. But we're going to talk about what you as a consumer may categorize as commercial and maybe educate you on some other things that are commercial that maybe you didn't even think were. So let's start with, what are some things that fit under this category that we should talk about today?
It's such a broad, and funny you mentioned blanket, because we use a lot of blanket type products. So we're talking portfolios, so developers or builder applications, land purchases, fix and flip loans, commercial mixed use spaces. So maybe some business, some residential apartment rental type complexes. We're talking over 9-unit apartment complexes or, doors within a residential rental space. The list is so vast, it's hard to cover all the ones that we could get into. But suffice it to say, we can service them all. And we can find a way to help secure those properties or those investments or those deals or opportunities that find their way of popping up at a moment's notice, as we discussed, in a quick manner, right? With little documentation compared to the QM or qualified mortgage approaches that we would typically take. But we can execute in a quick manner, help you win those deals in a competitive way that, maybe other borrowers or buyers or suitors for that deal don't have access to or don't know about. That's where really a brokerage like ours is able to help you leverage all the tools that are in our tool belt to make your portfolio stronger.
Absolutely. Basically commercial is anything that's not 1-unit houses, 1 to 4-unit houses, right? Anything that's not that is going to fall in commercial. If you can dream it. You have a dream of being a goat farmer in Montana, right?
We've seen it. We've seen it.
We can do loans for that, right? You're like, hey, I don't know where I'm going to get 14,000 goats, right? We can get you a loan for it, right? It's going to be kind of weird, but we're going to make it happen, right? That's an example of just kind of the off-the-wall things that we can figure out, and we have lending solutions for. Mm-hmm. So in this one, I want to talk about portfolio loans. That's the one that we see most often, right? We have borrowers, investors that utilize DSCR loans, work to their local bank, credit union, got a bunch of loans on 25 houses. They're a full-time investor now. That's all they do. They're servicing their portfolio and they're looking at seeing, hey, how can I grow my portfolio bigger and bigger and bigger while still maintaining cash flow, while still leveraging my properties? How can I do that? So what we have through a variety of different channels is a portfolio loan. Mm-hmm. So you got 25 houses, right? They're all you got a couple mortgages over here, you get a couple loans over here, you get a couple free and clear, you got, kind of wherever. What we can do is we can take all of those properties, blanket them under one portfolio loan, one blanket 30-year fixed, if that's what you want, 40-year fixed, 10, 20, 30, whatever the number is, right? Fixed rate loans, which you don't really see too often. Improve your cash flow potentially, take some cash out potentially.
Consolidate all those payments.
Consolidate the payments into one place. You're paying one lender, one payment per month, mm-hmm. right? Same situation here where we qualify based off of the DSCR, the debt service coverage ratio. It streamlines your process and it allows you to leverage your equity in a more efficient manner, right? And you can do that to purchase a portfolio, finance a portfolio, cash out refinance on a portfolio, or you can do all of those things at once.
Sure.
Right? Maybe we do a cash out refinance and a purchase at the same time so that this refinance covers this purchase's down payment requirement. And I don't have to bring any money to closing. Boom, I have I've got $500,000 in equity. Why can't I use it?
Sure.
Sure you can.
Well, these are the stories that people talk about, you hear the success stories where one guy started with one property, right, and now has a portfolio with a bajillion properties in it. We just keep leveraging, almost like nesting dolls, if you will.
Yep, exactly.
Right? We just keep leveraging. We leverage, and we wind up with more properties than than we had before. I mean, obviously than we had before. So it's a really efficient way to use your money and the equity that you have in the properties. And we get to capital, especially when the market's high, right? All these property values are so increased than they were before, or they have been in the past.
Everything's appreciated like crazy.
Right. And so we get to capitalize and lock in, maybe is a good term, lock in
or
your
utilize or
those equity positions and capitalize on the gains that we're seeing, and then leverage the excess equity that's in there and actually, put it on paper. Because right now it's on paper, right? But it's not real. It's not in your pocket. We can take that money out of the properties, put it right into new properties, another portfolio, whatever your situation is. We can start to leverage that and really grow your portfolio, your book of business. Sure. So the concept of portfolio and leveraging leverage, it's a little pie in the sky, right? So Justin, are you working on anything in particular that we can kind of unpack and zone in on about how we're actually doing this in practice?
Yeah, so I'm working on one right now. So let's just throw some real world numbers out there. Obviously, we're going to keep the client anonymous. We're going to keep everything confidential. But these are the numbers that we're utilizing. So in this particular client situation, he was presented with an opportunity to purchase 24 homes here in the Wichita metro area at a pretty good discount. He was going to get them for about $1.5 million. They were cash flowing pretty well already. He's assuming that the value right now is, two-ish million, 2.1 million or so. So he's coming in with a pretty good equity position. So he came to me and said, hey, Justin, I'm being presented with this offer. I don't want to pass it up. If I buy this, am I going to have to put, 20, 25% down? That's a lot of money, right? That 20% down on $1.5 million, that's $300,000. That's a lot of dollars, which this client has. But is that the most efficient use of our funds? Maybe, maybe not. He also has about 15 properties himself, and 8 of which he said, hey, I'd be okay with leveraging these properties, maybe taking a loan out on these homes, which are in a really good equity position, to cover any down payment that maybe you needed on the purchase. So what we did, we started to cash out refinance on his portion of his portfolio. The value is somewhere around $900,000. We're going to take out 75% of that number, and he owes about $300,000. So he's going to get somewhere in the neighborhood of $250,000, $300,000-ish. The purchase, we're structuring in a way that he's able to come into this deal with no money out of his own pocket. Right, I mentioned earlier, buying it for $1.5, worth $2.1. We're able to structure this deal in a way that he can utilize that $500,000-$600,000 in equity, purchase the property as his down payment, as opposed to having to do maybe an owner carry or coughing up a bunch of money or doing this, that, or the other thing, right? What happens if these properties need work, which some of them do in this scenario, right? That's going to be a lot of expenditure on top of renovations and rehab. So we structured this deal in a way that he's actually going to get a little bit of a rehab budget for each property, $10,000 to $15,000 a house. We're going to put this thing on a 30-year fixed with an interest rate right around 5%. He's going to be able to get into these properties, renovate them, make them rent ready, increase the rent slightly, and increase his overall net cash flow per month by about $8,000 to $10,000 a month. I presented this option to him, and he goes, why didn't I meet you yesterday or a year ago, right? And when we're able to talk to investors about, hey, this is a way for you to scale your business extremely rapidly. This is a way for him to go from 15 units to 40 units or 39 units, right? Very, very quickly with no excess money out of his own pocket, right? For him, it's like, hey, why would I not do this? So hopefully that real world scenario makes those numbers seem a little bit more real and kind of grasp the concept a little bit more. Of course, as always, situations are situational. Talk to your loan officer and they will run you through the scenario and run through a bunch of different options. That may not always be the best option for you to do a portfolio. It may not make sense. And sometimes it does. So having that conversation, having a good loan officer that can run through all those different ideas with you and bounce these ideas kind of off of you with you. Because at the end of the day, we are a team with you guys. We're a team with the investor. We want to work closely with you guys because the more money you guys can make, the more oftentimes you guys are going to come back to us. And, we love having repeat clients. It's the best compliment we can get. That's hopefully a quick little way of discussing portfolio loans. I'm sure there's way more loan programs we can talk about.
Another big big takeaway or a big perk of going with a portfolio loan is we get to look at the package holistically as opposed to each individual property. As you guys know, in the Wichita market, those properties that make a ton of sense investment-wise typically don't come with a very high price tag.
It's that prime, $50,000 to $80,000 mark.
And in banks, not big fans of that small amount, right? It can be very difficult to land the amount of funding or financing that you need to repair or flip or renovate or do whatever you need to do into that property to make it cash flow or rentable or whatever the situation is. When we put it into a package, we're able to look at that group as a whole, and that helps us skirt the lower priced properties and helps us to leverage what's actually there.
Yeah, a little bit more efficiently, right? When you had a $250,000 property and a $50,000 property, right? That $250,000 property is going to help offset that $50,000 property. It makes it a little bit more efficient. We could talk for hours and hours and hours about these. These are great loans because this is where real wealth is being built, right? In these large rental portfolios, leveraging these so you can quit your day job, running FedEx packages, right? Or whatever it may be. So you can focus on spending time with your loved ones, your family, doing what it is that you want because you have this passive income coming in. This is a way for us to create that for you in an efficient manner. In the next episode, we're going to talk about a few more commercial loan products, right? Fix and flips, maybe commercial office use, maybe some land only, maybe, what it is, a bunch of different ideas. So stay tuned for the next episode. We look forward to seeing you guys back. If nothing else, have a great morning, afternoon, evening, night, whatever time of day it may be.
Have a great something.
Yeah, have a great something. Make sure to like, comment, and
subscribe.
And we look forward to seeing you next time.